CNBC-TV18, embarking on a quarter century of excellence.
Hello and welcome to Startup Street. I'm Shruti Mishra, and with me as always is Arundhati Ramanan. These are the top headlines from the startup space. Paytm's parent company 197 Communications say that AI-led transformations will lead to 10 to 15% savings in employee costs, as this would result in a slight reduction in the workforce in operations and marketing. However, a Paytm spokesperson tells CNBC-TV18 that the company's core business of payment might see manpower increase by 15,000 or more in the coming year.
Fintech lender InCred becomes India's second unicorn in 2023 after raising $60 million from new and existing investors. InCred is now valued at $1.4 billion.
Scope, an invite-only startup networking platform, launches a venture capital fund worth $45 million. Fund will focus on the fintech and gaming sectors, will provide strategic funding to promising startups, fostering their growth and enabling them to scale their operations.
BharatPe records 182% growth in revenue from operations in FY23, while EBITDA loss decreased by 158 crore rupees. The fintech major witnesses 904 crore rupees revenue from operations in FY23 versus 321 crore rupees in FY22.
Twitter violates contracts by failing to pay millions of dollars in bonuses that it had promised to its employees. A federal judge ruled Mark Schobinger, who was Twitter's senior director of compensation before leaving the company, sued Twitter in June, claiming breach of contract.
Those were the headlines that we're tracking for you this evening. Now, electric two-wheeler startup Ola Electric has filed its DRHP and is hoping to go public by early next year. This is the first public offering by an auto company in the last 20 years and first pure-play EV company to list on the Indian bourses. The company is looking to raise 5,500 crore rupees via the IPO and is eyeing a valuation of $7 billion. Founder Bhavish Agarwal is looking to offload a 3.48% stake in the company. Parikshit Luthra joins us now to tell us all about the Ola DRHP. Parikshit.
Ola Electric is looking to raise 5,500 crores from the sale of 9.52 crore shares at a face value of rupees 10. Promoter Bhavish Agarwal is looking to sell 3.5% of his personal stake in the company and a total of 4.7 crore shares. Out of the total fundraise of rupees 5,500 crores, 1,264 crores will go towards the Gigafactory, 800 crores for debt repayment, 1,600 crores for R&D, and about 350 crores for business expansion. As far as financials go, the total liability stands at rupees 3,600 crore currently, compared to 3,270 crore in FY23. Liabilities have doubled from FY22 to FY23, from 1,734 crore to rupees 3,217 crore. The loss for the first quarter of FY24 came in at rupees 267 crores. Losses in FY23 amounted to rupees 1,472 crore versus rupees 784 crore in FY22. Strong revenue growth for Ola Electric, up almost 8x to rupees 2,631 crore compared to rupees 373 crore in FY22. Revenue for FY24 so far came in at rupees 1,243 crore, and this is nearly 50% of the FY23 revenue. The Q1 FY24 EBITDA loss came in at rupees 218 crore compared to the FY23 EBITDA loss of rupees 1,252 crores. In terms of future plans, the Gigafactory in Tamil Nadu is likely to be operational by March 2024. Ola will produce cells in their own Gigafactory for existing and future EV products. Deliveries of the Ola S1X in the 2 kWh capacity and 3 kWh capacity will begin by H1 of FY25, that is next fiscal. Ola will commence deliveries of motorcycles in H1 of FY26. The company is also looking to expand the portfolio to cover mass market motorcycles and scooters as well. The company has sold close to 2 lakh electric vehicles in FY24 so far. Capacity utilization was 37% in FY23. The employee attrition rate was 47% for the last fiscal. Now, in terms of risk factors that Ola may face, and this is what the company has said in the DRHP. One, Ola may continue to incur operating losses in the near term. Any reduction or elimination of FAME and PLI could adversely impact demand. Expansion of Ola future factory may be subject to delays, cost overruns, and warranty reserves may not be sufficient enough to cover future warranty claims. This is all that Ola has said in the DRHP. Ola has also said that they will require a significant amount of capital, which they may be unable to obtain at favorable terms. In terms of the path to profitability, industry sources say Ola is projecting sales of 3 lakh units in FY24 and 9 lakhs by FY25. The company is hoping to achieve EBITDA profitability of 6.6% by FY25.
Right, Parikshit. Many thanks for those details. But moving on, GreyOrange, an automated robotic fulfillment and inventory optimization software, has raised $135 million in the first close of its Series D funding round, led by Anthelian Capital. Existing investors such as Mithril, 3State Ventures and Bloom Ventures also participated in the round. So far, GreyOrange has raised over $420 million. Joining us now to discuss this further is Akash Gupta, the co-founder of GreyOrange. Akash, thank you so much for joining us on Startup Street today. Now, you're a warehouse robotics firm, so talk to us about your tech edge and give us some use cases and how much efficiency does this automation bring in for your clients?
Sure. Thank you. Yes, when you look at robotics or fulfillment orchestration, space, the improvement in efficiency comes anywhere between 30%, to 70%. The use cases being omni-channel distribution, e-commerce, fulfillment, and within the retail stores as well.
All right. So, basically you deal with robots. So talk to us about where you're currently manufacturing these robots. Is it completely made in India? And talk to us about the business model a little bit.
Sure. I think, when you look at GreyOrange, we provide complete end-to-end solutions, which consist of Grey Matter, which is our software platform, and a lot of different robotic technologies. Robots made, by GreyOrange are built in India, close to Gurgaon in Manesar.
All right. And what about the sectors that you cater to? Talk to us about this. Who exactly is your client? And any new sectors that you're hoping to venture into this year, next year?
Sure. When you look at, sector within retail, today, I would say, cater to 4 core verticals. One is, of course, fashion, fashion and apparel with, customers like, H&M. Second, sector we work with is general merchandising, basically with, customers like, Walmarts of the world. And third, basically, if you look at the sector, we work in, home improvement, again, customers like, Sodimac in South America, IKEA all around and likes of that. The fourth, vertical we just entered was pharmaceutical with one of the European, company called, Apothec Heart. And, as we grow, of course, we are going towards auto parts. We are going towards industrials because, again, today, warehousing is, something that is, very, very relevant for each of these, these sectors.
Absolutely. Now, you hope to deploy most of this capital towards technology, right? So elaborate a little bit on these plans. How are you planning to spend these funds? Any new offerings in the pipeline? Also, if you could tell us post this fundraise, what are you valued at?
Sure. So I think when you look at deployment of this capital, the large part of this is going investing into our software platform, which consists of Grey Matter and G Store. Today we are launching another part of the software platform called G Network, which is going to help coordinate different inventory nodes that are powered by Grey Matter and G Store. Another part of I would say. This fundraise is going into expanding a lot more into Certified Ranger Network. Just a quick 2 lines on Certified Ranger Network. It is basically a kind of a marketplace where we are certifying a lot of different robotic technologies that would be seamlessly working with Grey Matter and G Store as a complete solution. And today, we are basically bringing in newer robotic technologies onto our platform. So those are 2 core areas, and of course, I think investing more and more into our customer health, go-to-market is other aspect that we are investing in.
All right, so a couple of areas there that you're investing in. But if you could now talk about the numbers, what are your revenues currently at? What are you clocking? And what are the targets that you've set for yourself? What's the profitability looking like?
Sure. So when you look at our numbers, we are today powering 100 plus warehouse, 2,000 plus retail stores with revenue clocking around 100 million. And when you look at future plans, we are planning to be kind of EBITDA positive or profitable in next 12 months or so. The growth has been in that 50 to 80% year over year increase.
All right, so EBITDA positive in another 12 months. But if you could quickly tell us your biggest market, which are the new markets you hope to enter next year, and how big of a role does India play for you?
Sure. So I think, when you look at our biggest market, it's still likes of US and Europe. Of course, e-commerce omnichannel is fairly mature and the labor cost fairly high. So I think those, look at core markets. We are seeing a fair bit of traction from some of the other markets in Asia, in South America, and even likes of Australia. So those are some of the, I would say, markets that we are growing with some of our partners. And when we talk about just from the overall growth aspect, the software platform is also seeing a fair bit of new users coming in and new retailers coming in and kind of expanding their automation journey with us.
Absolutely. All right, Akash, we're completely out of time, but thank you so much for joining us on the show today.
Thank you.
All right, moving now to our hot seat segment. Enjoy movies in a theatre in the language of your choice. This courtesy Cinedubs, an app that is breaking language barriers. In the diverse landscape of Indian cinema, while regional films are increasingly gaining prominence, language barriers still pose a significant challenge. And this is not just limited to India, but it is a global challenge. In fact, a recent study by the Motion Picture Association of America found that over 80% of films released worldwide are not available in English, making it difficult for moviegoers who speak English to enjoy the latest releases. And addressing this gap is a movie enthusiast who, along with his brother, founded Cinedubs, a language-agnostic solution. And to elaborate more on that, joining me now is the co-founder of Cinedubs, Aditya Kashyap. Aditya, welcome to Startup Street. You're enabling users to enjoy movies in their own language at a nearby theatre, irrespective of the language the movie is being played in. So tell us how the Cinedubs apps works, what is required.
Yeah, thank you. Good evening, Shruti. It's a pleasure to be here today. We have kept in mind the least sophisticated customer. So that's why we made this app as simple as possible to be used. You simply download the app, log into the app, select the movie, select the language that you want to watch the movie in. The soundtrack gets downloaded on your phone. Once you are inside the theater, plug in your headphones and hit the play button.
Okay.
The phone will automatically sync with the scene running on the screen and starts the dialogue or the soundtrack in your language through your headphones.
All right, so we understand that Cinedubs is a language-agnostic solution, but is it only for moviegoers? Who's your target audience? And what pain points are you solving for each of your clients?
See, what is happening today is that more and more movies are dubbed in local languages or multiple languages. Let's say an example of Animal. Animal was dubbed in 5 languages, though it was primarily shot in Hindi, but it was also available in Tamil, Telugu, Malayalam, and Kannada. What they do is they release a Tamil version in Tamil Nadu, Kannada version in Karnataka, Malayalam version in Kerala, and Telugu version in Andhra Pradesh, Telangana area. Now, Tamilians are not living only in Tamil Nadu. What about the Tamilians living outside Tamil Nadu? Let's say there are around 18 lakh Tamilians living in Karnataka. There are around 13 lakh Tamilians living in Delhi. So these are our customers. So anybody who's not living in their native state, but still wants to watch a movie in the theater in their preferred language, that's the customer that we are pulling to the theater, letting them enjoy the movie in their preferred language.
All right. Aditya, you're currently live with 16 movies. You've now got more than 150,000 plus users and over 200,000 soundtrack downloads. So talk to us about your revenue model. How do you plan to make money? I understand you're in a pre-revenue stage, but what are the targets?
Yeah, so we are currently at the customer acquisition mode. That's why we're not charging from our customers. We plan to hit the 500,000 mark, I think, the way we are trending in next 3 months. And that's when we plan to start charging. It will be a subscription-based model or pay-per-movie model. And of course, even the ad revenues will jump in. So that's when we start charging. Let's hit the 500,000 mark first. Let people get used to using Cinedubs and enjoying the movie in their preferred language, and then we start charging.
All right, so you're currently betting big on a freemium kind of a model. But talk to us about your partnership so far. And I believe you're also in talks with Hollywood production houses for original movie soundtracks to be dubbed in various languages. Can you confirm this?
Yes. So currently, we are in fact partnered with almost all the big production houses in India. The Z Studios, Geo Cinema, Madak Films, People Media Factory. In fact, they have given us back-to-back 4 movies. Abhishek Agarwal Arts, which was a producer of Kashmir Files. So we got a recent movie from them. Almost all, Mr. Bonnie Kapoor. So we're waiting for Maidan to get released, and we're there with them as well. Hollywood, we have been talking to them, visiting them for the last 6 months or so. And we are at final stages with a few production houses there. I can't name them unless the contract gets signed. But yeah, we are at the final stages with them. And soon we will movies coming on. Because see, Hollywood movies are dubbed in multiple languages for global audience. And that's where we actually increase our reach globally.
All right. We will stay tuned for that one. There is competition in this space, be it, theatre years or domestic players like Dubverse.ai or SyncSense or Unidub. So let's talk about your marketing strategy. You've roped in R. Madhavan as your brand ambassador. So there is a huge fan base. But how do you plan to make Cinedubs a household name? How do you plan to grab a bigger market share?
So yeah, Maddie sir has been a great privilege for us. Since the time he has joined us, it's become very easier for us to get the movies out to attract audience. Our marketing strategy has been very aggressive for the last quarter. In fact, out of the 150,000 that we have, we got more than 100,000 in the last quarter. And I would also like to mention here that though we are marketing only in India, we have had our app downloads in Germany, US, Canada, UK, Middle East, Australia, all over. And this has been purely through word of mouth. Our customers who are using Cinedubs in India are calling their relatives living abroad and asking them to use Cinedubs and watch the movie in their preferred language. So along with our marketing support of marketing activities that we are doing, word of mouth is also helping us a lot. And that's how, see, word of mouth is the biggest contributor.
Absolutely.
And that will make us a household name very soon.
All right. Aditya, one final question, if you could answer that very quickly. Any plans of raising funds? You told me 500,000 mark is your revenue target. Any plans to raise more funds to fuel your aggressive expansion plans?
In fact, we have opened our books. We are raising $1 million. We already got a commitment of $200,000 from the investors. We're waiting for the rest 800,000. And we did raise around 300K from family and friends last year. And now we have opened our books again for $1 million fundraise.
All right. Thank you so much, Aditya, for joining us on Startup Street, and wish you the very best in all your growth plans.
Thank you so much, Shruti. Thank you. It was a pleasure being here. Thank you.
Thank you so much. With that, it's time for us to head into a short break. But coming up, what's leading India's D2C brands to shine? We get your special conversation with Karan Sitaram, the co-founder and partner at Fireside Ventures. On the other side, stay tuned.
CNBC-TV18, embarking on a quarter-century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back to Startup Street. Fireside Ventures is an early-stage startup investor in big names including Mama's parent Honasa, Boat, Yoga Bar, Wellbeing Nutrition, and the recent addition Sweet Karam Coffee. But what makes this venture capitalist invest in companies? Co-founder Karan Sitaram shares his insights in a conversation with CNBC-TV18's Rachna Dhanarajani. Take a look.
You've had 44 successful investments, 10 successful exits. If you could take us through the journey of the three funds and how's it been like, and if you could also mention your favorites.
We started investing in 2017 with a relatively small fund. It was 340 crores. And we made 18 investments out of that. And, we have had some great successes. Everybody today knows about Mama Earth and Honasa, which just went IPO, and also Boat. It's interesting, though, that we have another 6 investments there, which are doing very well, like Yoga Bar, Kapiva, 91 Cycles, Vadam Tea, the Ayurveda Experience, Design Cafe. So there is a whole bunch of companies in Fund 1, which have really, been very good investments for us. Fund 2 was a larger fund, about 860 crores. While in Fund 1, a lot of our investments are focused on FMCG. In Fund 2, we decided to broaden the scope. We invested in some companies which were in the wellness space and in the health space.
If I were to look back at all the companies, the pretty much nature is, of course, they're the D2C brands. But when we look at something like Honasa, which was, again, Indian ingredients brought to people, Boat, which was made in India, the vision was made in India and not to sort of do away with the Chinese headphones. Again, looking at Yoga Bar, which brings the concept of all the Indian wellness and nutrition, or even well-being nutrition. Is there a vision that you believe in and that sort of reflects in the pattern of your investments? Because all of these may sound a little similar, apart from D2C and numbers. What is it that you look for when you invest in a company?
Well, we have evolved our own philosophy, and we call this the value of good, right? And the value of good, as far as we are concerned at Fireside, is about 3 things. We look for founders that we want to back, founders that we want to make successful, so a great partnership with founders. So we look for founders that want to partner with us, and we would like to partner, and that we think can help in some manner to make them successful. The second thing is what we call Planet First, which is about investing in businesses that can have a positive impact on the planet. And the third thing is what we call One Fireside. And that's about saying that within Fireside there are people with different skill sets, different abilities, and all of that should be available to every one of our companies. On the other side, when you think about the companies that we invest in, again, we have a value of good approach out there. And there we're looking for companies and founders who are putting consumers at the center of their organization. How do they really have strong consumer insights? How do they really bring the consumer into the organization? Design products, go-to-market systems, communication, which are all squarely focused on exciting consumers and getting customer delight. Planet First, how can they be really good at improving their planet practices? Again, very important. And the third thing is People First, which is about really creating organizations which are going to attract great talent, have very energized people who are going to create wonderful businesses. So at a high level, that's the 3 things actually that we look for in the companies that we like to invest.
So there we have it. To get any sort of investment from Fireside, these are the 3 things that a startup founder has to keep in mind.
Absolutely.
Okay. Talking about your recent third fund, if you could take us through what has already happened with that fund and what is expected of it. We know your investments in Sweet Karam Coffee and Ineto, which is a fertility monitor company. How is this shift going from D2C to a medtech company?
Well, including the term sheets out there, we have got about 12 investments in Fund 3, which closed in November of 22. We are continuing to invest in the health area. Inito, as you said, is one of the investments that we have done. We are delighted with that because it's about IP created in India. We are looking at different spaces in the health area. For example, we think there are not broad healthcare solutions, but very specific spaces that we think are going to become large over the next few years. For example, things like mental health. We think that's a large issue in India, and there aren't enough solutions out there. Similarly, we think that Indians are taking more to sports, to fitness, and we're seeing evidence of that in some of the Asian Games results and cricket and all of that. And we think that's going to require specific care.
And with that, it is a wrap on this edition of Startup Street. From Shruti and me, goodbye and many thanks for watching.
CNBC-TV18, embarking on a quarter century of excellence.